have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Gotham, welcome to our broadcast. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, trading psychology is important. The goal is to become a disciplined trader, a confident trader that requires a repeatable process where you have a trading plan. I encourage you to have a trading plan. We do have one-on-one coaching if you want a custom trading plan. Everybody's different. But in general, there are concepts, right? Concentrating on things that are within your control, right? The economy of control. We have a perfect example. Tomorrow is a FOMC meeting, right? There'll be uncertainty. How the market react, 25 basis points cut, 50 basis point cut. Will the market be disappointed, or will it be, will the rally continue from these overbought levels? So since it's very hard to predict what the outcome of that event is going to be, you concentrate on things that are within your control. What is within your control? Risk management, right? How many positions you have and your position drawdown, right? What is the maximum risk if the market goes in a different direction than you think? So negative and positive visualizations can help you determine that, right? I propose that if you're new to trading or you're new to our services, so you start with 30% portfolio in cash and look at your portfolio drawdown, number of positions times position size. I propose to start, if you're new to trading or new to our services, again, start with 4 positions, maximum exposure 2.5% of account value per position. How do you determine that? We do have different tools. First one is Stock Forecast Toolbox. Basically shows you model is neutral, right? The model runs every weekend, every day. This for the 10-day prediction runs every day and basically says after FOMC meeting, even though it's not trained, right? It's not trying to predict the outcome of FOMC, but based on current price action, we could see new highs, right? 660, even 670, right? We're already at 660, so 670 could be the new highs. Good morning, Almar. How are you? Or on the downside, potentially 640, 645, right, is your support. So I would look at the model, and then I would look at the position, right? Going back to game theory, what other people think. Heaviest position is in SPX, right? Most of the contracts are concentrated in September expiration. There's not much hedging going on in October. Right, let's see if it changed. It still hasn't changed. $19 billion in October, very low. I mean, I haven't seen such a low number going into an expiration week. So all of these contracts will expire, and then as a result of FOMC meeting, if it's a positive news, then the market could be at 6,700, right? One standard deviation move, 6,700, or it could revisit the September lows, so 6,400, 6,450. So in terms of support and resistance, you can see first thing first, we just broke through the 6,600 and we're staying above that level. So this is your support number 1. We're trading right above that, and the next one is 6,700, right? Is your resistance number 1. If we drop below 6,600, right? We closed it yesterday. We're trading above 6,600 today. Retail data was a little bit better than expected. If it does break through the 6,600, then you see, kind of equal 6,400, 6,500. So I would say this is support number 2, support number 3. If you are, if you're short-term aggressive trader, then maybe at 6,600. If you think this is a false breakout, maybe you sell calls. If you think it's a true, if it's confirmed breakout, which is probably too early to tell, then you buy at 6,600, right? If you're doing day trading and you want to close position before the tomorrow FOMC announcement. But if you buy, you can buy SPX, but if you're buying spiders, then I would propose stop loss. VIX is low, right? I think 15 yesterday. handle. So 6 points, right? 1% stop loss, right? Based on estimated move, if you buy and market at 66.15, right, then I would propose 1% stop loss. So on FPY, it's about 6 points. And then if you're thinking about, month, right, or a couple weeks, then I would use maybe a 3% stop loss, 3% stop loss, 18 points. And then on a $10,000 account, I propose not to risk more than 2.5%, so $250. So then you would divide $250 by 6, right, or $250 by 18. Any questions? We lost Gotham. Where did he go? Nobody wants to know about risk management. Everybody wants to make money. That's great. Anyway, so in terms of signal, you can see aggressive power trader, Caterpillar, GLW, Morgan Stanley. All right, it's kind of we've seen these signals in the past couple of weeks. They're continuing to grind higher. Spiders flat for today, but we're still making new highs, right? Let's see, 1 hour. Yeah, so new highs, 10-year yield, kind of not moving, better than expected. Retail data, equal weighted S&Ps flat. Let's see, SPX is above 6,600, so trading second day. Gold, silver continues to rally. Bitcoin is flat, Ethereum is flat. Let's see what else. Give me 1 second. Forgot about the pay program. Send that email. How's the WT actually going? It continues to grind higher. One second. So EWT is 64 call. So again, weak dollar, and you have emerging market is outperforming, continues to grind higher. October. Call, 64 call. $1.25. Okay. So weak dollar and emerging market in general, China, Taiwan, Hong Kong, Vietnam, they're just kind of continues to move to the upside. Tesla yesterday rallying. Elon Musk buying $1 billion worth of, so that's impressive. And SPX continues to be, makes new high, and above 6,600. What else is interesting? Let's look at interest rates. So glued to 4% going into the FOMC meeting, right? You know, the debate between 25 basis point, 50 basis point. I think the most common case scenario, right? Core scenario is that 25 basis points, but future guidance, that's kind of that plot that's unknown. So we'll see. VIX is at 16, right? VIX, we have expiration tomorrow, right? So another event, VIX expiration, which may or may not cause, movements in the market. And spiders is small caps, kind of consolidating, right? For the past couple of weeks after the rally, it's close to year-to-date high, right? Close to 2024 high. Regional banks pulling back, gold, silver slightly higher. Let's see, consumer staples. Google, $3 trillion company, continues to grind higher. That was a good signal. Bitcoin is flat. Nvidia continues to underperform, right? China is labeling them as monopoly. Oracle is up on the TikTok news, right? Potentially U.S. and China agreement on TikTok, and see if Trump is going to travel to China and sign some deals. So that's coming up. That's another something to keep an eye on. And silver continues to just grind higher, 43 silver futures. All right. Any questions? So Oracle is up on the news. TikTok news. Spiders is flat. So we need to. So I did put it on a trade on SPY, selling the call spread. Elmar, good morning. Rosser, happy Tuesday. Cherry Blossom, how are you guys doing? All right, so kind of continue selling call spreads because the market is overbought. So I sold 660 call for 25 cents, and then I sold 661. Oh, so I bought it back for 15 cents, and then I sold 661, 662 call spread. And again, the idea is that you want to close it before the end of the day. And I agree with Fred. Sometimes, I mean, it's easy to close. It's just sometimes it trades right at that level, so it's difficult to close if it's right at in the middle of your strikes. But that's also dangerous. That's not dangerous, but that's the risk that you get a sign, right? If it closes right above 661, right near this level, then potentially you can have larger losses. So you want to avoid that. So let me put an order to close it. Let's see, try to close it for 10 cents. $0.10. Damn it. Okay. So trying to close this for 10 cents, sold it for 40, right? Risking 60 cents to make 40 cents, and trying to close for 10 cents. Meanwhile, let's see. Coach. All right. So that's Spider, trying to close for 10 cents. Again, I think going into the FOMC meeting, you want to be, I mean, you could be, have more bullish positions, you can have more bearish position, but I would not, assume that there is no pull, that the market just going to take off. So I think, selling calls, well, call spread, I will close it by end of the day, but I still have a QQQ put spread. Right, I still have in terms of position, I trimmed a lot of my positions, right? Morgan Stanley, Triple M. So I did get filled on STX, kind of a deep in the money call spread, 185, 190. I mean, very, AI theme is kind of alive, right? Alive. So you can see, stocks that benefit from they're able to monetize, they continue to grow, going higher. Then this is the data storage, right? WDC, Western Digital, everything that has to do with building data centers, right? Whether it's utilities, energy, or networking, security, infrastructure, these are the main beneficiaries. Spider 661, okay. Goes theta. We'll see how much theta will move. Well, it'll move fast, right? Every hour there's going to be decay. For now, I put an order. It's trading at 35 cents right now, 37 cents. All right, Fred, what are other positions? So Apple, right? We talked about Apple. I mean, in general, the Magnificent Seven kind of start leading the market again. So Apple continues to grind higher. So let's see. Let me log in. So Apple was the signal from last week, right? Similar to signals for this week: Caterpillar, GLW, Morgan Stanley. So I filled at 235.79. I have an order to exit 239.40. In 238, it's up by what, $3, 1.5%, short period of time, 950, no, 1 day. Maybe into a FOMC meeting, maybe it makes sense to trim the position. It's reaching the overhead resistance, so let's do that. Let me trim. It's up 1.5%, so that's good. $60. So I'm going to close the shares that I bought here. Okay, so I got filled. So this was a quick, you know, a little bit, 1.5%, 1.4% move in 1 day. Basically back to my cost basis. And then this I would close if it does go to 244.10, right? If there's a breakout in Apple, after a FOMC meeting, obviously there could be, right? If it's positively received, then that would be my Apple position. So that's Apple. Just send alert. What else? Micron. Also stock position. So I have Apple, I have Micron. Micron continues to grind higher, right? Semiconductors leading the market. Again, AI. So for now, the trend is intact, right? I mean, obviously overbought, needs to consolidate, but you can see semiconductors broke out to a new all-time high. So after our FOMC meeting, if this breakout level is not, you know, if we're still above this level, I would say Monday, then this is probably a confirmed breakout and market is going to continue grinding higher. So that's Micron. So I have Apple, I have Micron. Still have QQQ hedge, right? I still have QQQ hedge. 560, 540 in case, you know, kind of hedging my Micron Apple position in case market does a reverse and sells off. Not sells off, but at least pulls back. Any questions? Meanwhile, spiders are still flat. So regional, you know, small caps pulling back, transportation pulling back, small caps are pulling back. We have expected results. People are getting ready for the event. Microsoft slightly down. Tesla is up. JP Morgan, Meta looks good. Meta catching a bit again, so it's good. Keep an eye on Microsoft. Nvidia is weak, kind of staying at the 50-day moving average. I'll keep an eye on Nvidia, and then that's about it. TCJ pulled back after yesterday's rally. Let's see what else is interesting. Iran, MP, Key pullback. So we have some of the names from yesterday that rallied. They're pulling back. People are taking profit into the FOMC meeting. Okay, so pretty good. Airlines pulling back. Banks a little bit weak. Meta and Apple still grinding higher. Yeah, small cap, mid cap are down. Okay. And then in terms of earnings, FedEx is FedEx earnings is, I think, what, tomorrow after the close? In 2 days, Thursday after the close. Okay. Is the rate cut already priced in the market? I personally don't. So the question is the rate cut already priced into the market? I don't think so. I think actually expected move. If you look at the expected move for spiders going into the FOMC meeting, let's look at monthly expiration. 1%, right? Basically, the market expects 1% move as a result of FOMC. I think it's going to be bigger than 1%. I mean, it could be to the upside, probably 1%, yes, but to the downside, if there is a downside reaction, I think it's going to be more than 1%. And it could be one of those buy the rumor, sell the news, right? That everybody's so anticipated, nobody cares about unemployment ticking up, weak employment data, nobody cares about housing data, weak GDP is not really strong, so people might start concentrating on that, right? And I don't know what we really don't have any let's see, what other news do we have after September 17. Okay, so we have FOMC. Well, initial jobless claims, right? It was above 260,000, right? 260,000. It's 240,000. I think people attribute it to, forgot what was the highest jump. I mean, state and local, federal and state government, right? There's a drop in the employment. And housing construction jobs, right? Drop in employment. So I think that's the lead. So could be anomaly, but if Thursday we have another 260,000 print, right? Economists watch 250. Anything below 250, it's okay. Anything above 260, especially for few consecutive weeks, that could be interpreted as negative. So then this move will be amplified, right? It could be 1-2% on Wednesday, and then you have Friday expiration and Thursday initial jobless claims. If all the leading economic indicators, and then people are not hedged, right? They don't have QQQ or spiders hedges, then the move could be amplified, right? So instead of 1%, could be 2%, could be 3%, right? So I don't think, to answer your question, I don't think it's already priced in. I mean, obviously you could have surprise to the upside, like 50 basis point cut, right? Or 25 basis point, but indication, I think right now, based on the futures data, if I understand this correctly, market prices in, I think, what, 75 basis point cuts this year. So maybe 25 now, 25 November, 25 December, something like that, or maybe only 50 now. And then 73 rate, so 3 rate cuts this year and 3 rate cuts next year, right? So if Powell says there'll be more because the economy is great and inflation is down and market, and there's no reason to keep high interest rates, well, then you could have positive reaction, right? But if he cuts it because he's concerned about the employment and employment market continues to deteriorate and he's afraid that he's going to be too late, then the market could sell off. Other than that, GDP numbers, PC is down. So yeah, I don't think we're gonna have any other big news right in September. Then October, now people are gonna move into earnings, start thinking about earnings, and earnings have been decent, right? Double-digit growth. So, you know, yeah. So I think if we do have sell-off, it's going to be in September, or not sell-off, but pullback will be in September. If we don't have a pullback in September, we just continue to grind higher, then yeah, I think then market is going to, you know, I think earnings is going to be decent. So yeah, it's done that to answer your question. Spiders 28 cents. They are closing spiders. Let me see. Fred, I mean, most important is position, right? If you're glued to the screen, and Fred said that this is a roller coaster. If you feel like it's a roller coaster, all it means is that your position size is too big, right? Because, you know, I sold it, what, for 40 cents, right? I sold it for 40 cents. Okay, I can lose 60 cents or I can make 40 cents. No, that's it. Times 100, $60, $40. So, you know, I'm prepared for both outcomes. But, you know, if you did more than, you know, if you feel this is a perfect example where you kind of glued to the screen because it expires at the end of the day, probably position size isn't correct. So if you did maybe 2 contracts, consider doing 1 contract. If you did 10 contracts, consider doing 5 contracts. But you have to find that trigger point, right? Going back to prospect theory, right? Like I would always read this whole prospect theory, right? The idea is that you do have, you know, facing potential risk aversion, and there is this reference point, right? This whole reference point. And this is where custom trading plan is very important because we all have different reference point, right? John's, Fred's, Don's, Vlad's, we all have different reference point. We're managing different amount of money. We have different years of experience, and we have, you know, different relationship with money, right? Different psychology. So that is something you have to find for yourself. But in general, I know if I feel like it's a roller coaster, okay, it's time to decrease the size, right? And start with 1 lot, right? Start with, okay, you're either up $40 or you're down $60 maximum, right? And then see, you know, if it doesn't feel like a roller coaster. But it is trading at 32 cents. Let's see. Do I have a trade for Fed meeting? Well, I have bullish positions that, you know, if market reacts positively, it will go positive. But I do have a put spread, pretty wide, 560, 540 spread. So in theory, if QQQ breaks 560, you know, then, you know, my portfolio will start growing, right? But it has to be, I mean, you know, QQQ have to sell off 5%, right? QQQ have to sell off 5 to 6%. And if it does, and 50-day moving average doesn't hold, then I have a trade, right? So that's my that is my hedge. That is my hedge, because I do think from seasonality point of view, right? From seasonality point of view, which you see 87% correlation, very high correlation. Usually there is a pullback end of September. Not every year, right? It doesn't. It just, you know, if you look at, I think bar chart is doing a decent job on the seasonal returns, right? If you look at the seasonal returns on SPX, the worst months is September, right? Over the span of, I don't know how many years they're using. Do they say how many years they're doing this? I traded on I don't know if they go all the way from the beginning of spiders, yeah, 30 years or 10 years. Looks like maybe 15 years. But anyway, so the worst month is September, right? But not all. 2025 it was actually decent. 2024 2%. So it doesn't have to be. But when you do have pullbacks, usually September is the worst month, right? I mean, you have 8% move in 2010 after large rallies. So yeah, so that's that, right? And let's see, SPX is fighting for the, I assume, 6,600. So it's similar. We had these 6,500, 6,400. Now it's 6,600. And they'll probably move right after the Fed tomorrow, and when we expire and all these, especially the contracts, the September expiration, people are going to put new positions, and it could go either way. Just what people see. Yeah, they're all done. Yeah, prospect theory does make sense. Thank you, Fred. Any other questions on Discord? Yeah, if you name your pet Theta, turtle pet Theta, then yes. Yeah, I mean, selling premium, especially when you see overhead resistance or support, like Fred does, that does make sense. Right? You see Bitcoin kind of found support again. What else? 903. Let's see what happens. Oracle is still up on TikTok news. Got to 320. 50J is down, reversed half of its gains. See how's position on CCJ. Doesn't have a lot of position. Nice. Not expected move, CCJ. Yeah, 80. Okay, so 80 is my, maybe as it gets close. It got rejected at 85 level, so 80 is the largest. So Bob, Fred, I know you guys like this stuff, so at 80 maybe add CCJ. I'm gonna watch the 80 level. I assume people are position positive. Let's see. Wow, it's actually more puts. It's interesting. More put buying. Except the January. January is, wow, 2-to-1. This is pretty equal. This is pretty equal. This is small. Well, this expires, right? This expires Friday. But yeah, it looks like January people are just loading on January contracts. Okay. And then what's next point? September 65. Oh, it's pretty far. That's pretty far. 75 is a flip point. Okay. And SPX got adjusted. What's the SPX flip point? Okay, so move to 6,500. So it looks like 6,600 got confirmed. 6,500 is where buyers will step in. 6,500, but 660 is the put wall, right? profit taking, there a good chance of a sell-off. I mean, end of day, you never know, right? I don't know. I mean, depends on the definition of a question. Was do I anticipate a sell-off? You know, assuming there's no news, probably not, right? Because you can see a very large positioning at 6,600 puts and calls. So this is kind of a gravity now, and now you have 6,500 as the flip point. So I don't anticipate move above 1% today, right? It's going to be less than 1%. I mean, so for now, the 6,600 is acting as a magnet, right? It's acting as a magnet. Probably this week it's going to be a repellent, right? It's going to catapult to 6,700 or back to 65, 6,400. But for now, we're glued to 6,600. So for time decay, if you like Fred selling calls or selling puts, you can see we're at now 25 cents on that spider spread, 25 cents. Rushing to Apple. Let's send alert for Apple. So Apple is already at that level, 240. So that was good. Let's send an email. What did I? So Apple. For now, I'm only doing Apple. Okay. So let's send an alert for Apple. Model is doing a good job finding some of these outperformers. What's today? Caterpillar. I like Caterpillar. It's facing overhead resistance, but at 50-day moving average, I would consider, or close to maybe 20-day moving average is where I would buy Caterpillar. GLW has been a signal. GLW just vertically going up. I assume it's either Apple or some AI news, but that's pretty impressive news in GLW. And Morgan Stanley, actually, I mean, also continues to outperform and starting to consolidate, but I mean, all good price pattern, right? Momentum trade is back, right? We had some periods of consolidation. Now you start seeing breaking outs, and it's the same stocks, right? It's your wealth managers, it's your banks, it's your industrials, it's your semiconductors, it's your AI theme. So, if I would invest, I would stick with the momentum stocks. And that's where this model is actually doing well, right? It finds the stocks that have momentum behind them. Let me know if you guys have any questions. Right, profit accelerator traders. Let's see, add Apple. Or so I'm going to say close half of Apple, right? Close 50%. So let's say close 50%. Apple position, best execution, current price. What's the current price of Apple? It's actually doing well. 240, 240. Power trader. And then I send the new. Okay. Okay. So Apple is doing well. SPX is how much is so spread is 20 cents. And close it for 20 cents. So just keep an eye on spiders. If you don't have a time to watch, I would close it now. You can make 20 cents. On 60 cents risk, it's what, 30% return overnight? That's pretty good, right? And risk taken. If you have time to watch, then okay, you can watch. Just one goal is not to get a sign, right? You don't want to get a sign on these spreads, on options that expire today, and it's right at the support. So maybe it makes sense to just close the spider spread. Especially if you can't watch it. I cannot watch, I'll close it. 122. Okay, I'll close the spider spread. Okay, so I adjusted to 22 cents. Should hit that. Yeah, 22 cents. So that's 24 cents, trading 24 cents now. Okay. That's all I have for today. Thank you very much. Keith will be back at the closing bell, and he will do the morning bell. I'll be back closing tomorrow. So we'll have the Fed decision. We'll see how the market reacts. Again, look over your positions exposure, right? And just make sure that it doesn't feel like a roller coaster, right? The only way it's not going to feel like roller coaster is if you got the right position size. So that's maybe one thought. All right, guys, thank you very much and have a great day.